Welcome to this deep dive.
Great to be here.
Today we're digging into Wall Street's reaction, specifically how things looked about a month after President Trump rolled out those global tariffs.
Right. It kicked off quite a bit of uncertainty.
Exactly. We've got some articles, various reports looking at, the immediate fallout and some of the economic numbers that came out afterwards.
Okay.
Our goal really is to unpack what went down, why it's significant, and get a sense of what experts were saying about the potential long-term picture.
Okay, let's get into it. I mean, thinking back, that initial announcement definitely sent some ripples, didn't it?
Oh, for sure. There was caution. You saw it in the market dips initially.
Mm-hmm.
But what's really striking looking at these reports is how quickly things seem to, well, turn around.
Yeah, that recovery was pretty sharp.
It really was. Our
Excellent.
sources highlight this major rebound. U.S. stocks actually hit their longest winning streak in 2 decades.
9 days straight, wasn't it?
9 days. First time since 2004, apparently.
Good.
Sort of peaked on that Friday. You had the S&P 500, the big 500 companies, and the NASDAQ, the tech index, both up 1.5%.
And the Dow jumps, too.
The Dow jumped 1.4%. Pretty significant, especially when you think just the month before, the market was down because of those exact same tariffs.
So the question is, what flipped the switch? It wasn't just random market noise, right?
No, definitely not. The reports we looked at point to a couple of key things fueling that optimism.
Okay.
Well, first up, there was the jobs report. Department of Labor figures came out.
Yes, the April numbers.
Right. They showed U.S. employers added 177,000 new jobs.
Which was better than analysts were forecasting, I believe.
It beat the predictions, but interestingly, it was actually a bit of a slowdown in hiring compared to March.
Okay. So still positive, but maybe less momentum.
Seems like it. And the unemployment rate didn't budge, stayed steady at 4.2%.
So how much weight did that jobs number really carry, given the tariff background? Was it enough to really shift sentiment?
That's a really good point. I mean, maybe the slowdown was a slight concern, but adding 177,000 jobs, even if slower, probably eased some of those immediate fears, right?
Yeah, it likely countered the narrative that tariffs would instantly slam the brakes on hiring.
Suggests maybe some underlying strength or at least stability in the labor market, perhaps?
It points that way. A stable job market is often seen as a buffer,
Okay, so that's one factor. Then there was also news about potential trade talks.
The U.S.-China angle,
Yeah, reports said Beijing announced it was considering Washington's offer to talk.
which is significant, especially when you remember China was facing by far the highest import taxes mentioned in one source, like 145%.
Wow, 145%.
Yeah.
Yeah. So any hint of thawing relations there would be welcome news for investors, I imagine.
Absolutely. Just the possibility of dialogue can be enough to boost confidence sometimes. It suggests, maybe there's a way out of the escalation.
It's interesting how much sentiment can swing just on the potential for policy changes, not even concrete actions yet.
Definitely. Markets often trade on expectations, right? Future possibilities.
And then the tech sector, that really seemed to power a lot of the recovery.
Yeah, tech had a strong showing.
The reports we saw flagged Microsoft and NVIDIA specifically. Both grew more than 2% during that period.
Mm-hmm.
Why do you think tech was so, resilient? Were they just less exposed?
Well, it could be a few things. One, global demand for tech, for digital stuff, was just really strong overall.
Okay.
Two, maybe some big tech firms are less reliant on the specific physical goods hit by those tariffs compared to, say, heavy industry.
Right, more services, less raw materials crossing borders, maybe.
Potentially. And third, tech innovation moves fast. Sometimes that growth engine can power through broader economic headwinds, at least for a while.
Okay, so we have this initial shock from the tariffs and this strong rebound fueled by jobs data and trade talk hopes, particularly in tech.
Right.
But what were the economists, the strategists making of it all? Because it sounds like not everyone was singing the same tune.
No, definitely some different takes. And this is where it gets quite nuanced.
Okay.
So you had Carl Weinberg, chief economist at High Frequency Economics. Looking at those job numbers, he basically said, look, nothing to complain about.
Pretty straightforward.
Yeah. And he added he didn't see signs of a nascent recession in that data.
Okay, so one relatively optimistic voice there.
Then you had Seema Shah over at Principal Asset Management, chief global strategist,
What was her take?
also leaning optimistic, but with a big if. She said the U.S. had a decent chance of averting recession if
If.
it pulled back from the tariff brink. as she put it.
Ah, so conditional optimism depends heavily on policy choices going forward.
Precisely. Her point really highlights the ongoing risk. The data might look okay now, but more tariffs could still derail things.
Which sounds closer to the view of Olusonola at Fitch Rating.
Right. He was much more cautious. Sonola, head of U.S. economic research there, basically warned it would take time to really see the full effects of Trump's tariffs.
Makes sense. These things don't always show up overnight.
Exactly.
Yeah.
And he said, despite the good jobs report, the outlook remains very uncertain.
So don't get too carried away by 1 month's data.
Pretty much.
Yeah.
And you have to remember the context, too. Just the week before that jobs report, Commerce Department data had shown the U.S. economy actually contracted for the first time in 3 years.
Oh, right. I remember that. So the jobs report landed right after news of a shrinking economy.
Exactly. So while the jobs numbers probably eased some of those immediate recession fears that the contraction data sparked,
It didn't necessarily erase the underlying concerns or the potential long-term tariff impact.
that seems to be the cautious view, yes.
So wrapping this up, what does this complex picture mean for you, the listener? We've seen these initial tariff worries quickly give way to a frankly surprising stock market rally.
Fueled by decent jobs numbers and that glimmer of hope on U.S.-China trade talks.
But then you layer on these expert warnings saying, hold on, the real impact might still be coming, the outlook is uncertain. It raises a really interesting question, doesn't it? What does it truly signal when short-term market reactions seem positive, but experts are still flagging significant long-term risks?
Yeah, how do you weigh those conflicting signals?
And how resilient is the market, really, when facing these kinds of ongoing trade tensions? Plus, there's always that lag, right? The time it takes to fully grasp how major economic shifts like these tariffs actually play out.
It definitely highlights the uncertainty involved.
It really does. We'd love to hear from you. What stood out to you in this analysis of the market's response to the tariffs and those subsequent economic indicators?